Hey everybody, welcome to Trading Capital's technical analysis of the Tesla's chart. So Tesla has had a very impressive move off the lows. If you're a Tesla bull and you caught this move from 103 all the way up, that is an impressive win to start the year in 2023. Our members were also able to capture much of the upside as we were able to accumulate down here. But Tesla's hitting an important level, and what I'm going to bring to your attention is this $96 move. Tesla has had a beautiful $96 move right into its first key level of resistance. You're going to see a bunch of other $96 moves on the chart, but before I show you that, basically the level of resistance that Tesla is hitting right now as we speak is this key level. You can see you had a major pivot bounce there, bounce over there, a bounce over here, a little bit of a higher low bounce, and then you started your uptrend rally. And then you all of a sudden came all the way back down here, bounced on the bottom of the channel, bounced to the top, pierced the channel, pierced the resistance again, and then collapsed. So now you're back to this original breakdown point, and you've come in an extended move off the lows, being the fact that it was oversold. And then it also happens to mimic a measured move. So you see this $96 move over here, you see this $96 parabolic move over here, which was met by a little bit of selling, then a rally, larger sell, rally, and then a larger sell, but really never making a higher high once you had that $96 move. Then you look all the way back in 2021, a similar declining scenario, taking this high to this low, a minus $96 move. Then you had a terrific bounce. And then you scroll on the chart again, and Tesla from this gap up low after a major consolidation, gapped up to the high here and rallied to this equals a $96 move. Your initial consolidation from the low to the high, $96 move. So Tesla has this magical sweet spot number where it really tracks the liquidity flow in this move of $96 to the upside and to the downside. So the question is, can we see resistance running into, or can we see Tesla running into resistance here? Obviously, there's a lot of people on the short side that are watching the larger time frame. If I scroll to the weekly chart, we obviously all know about this topping formation that triggered. For those of you that believe in TA, it has been a dream to trade because once you got the trigger here, it was a very easy short down to the bottom. Now, I shouldn't say easy. No trade is ever easy. You have to really take what you know about the patterns and implement it. Knowing is not enough. You have to act on what you know. But clearly see Tesla's had an impressive rally. Now, most people are waiting for a retrace back to this 218, 220 level, which was the original breakdown point up here. You can see you had 4 weeks of chop and consolidation on the weekly chart before you ended up breaking down. So a lot of people are waiting to short Tesla over there now. These markets are so tricky, and I don't think we're going to get that short setup so easily because, again, there are a lot of people just waiting on the sidelines to short that magical retrace to the neckline 220 number. And whether or not the markets give us that, we will certainly see. Obviously, you can see there is distribution occurring at the highs with these tails being present. You fill the key technical gap. And like I said, this is a big level that Tesla has to get through. And if you really factor in another reason as to why I'm skeptical of Tesla going higher. Now, I'm not saying it can't go higher. There's certainly still the Twitter announcement that could bump this stock up into this 220 level, off of a tremendous rally. But if you simply compare the 2-year yield, and I've overlaid the 2-year yield here in orange, and you can see that in this last period over here, the 2-year yield put in a high, and basically that was Tesla putting in a low. You had a gap down and then reversal. So it really correlates to the high over here and to the low. And you can see the high on Tesla was pretty much made at the low end of this rate over here on the 2-year. And now what has just transpired after a massive rally in the 2-year yield and yield treasury market is a big rally. So if you factor in we're trading at roughly basically this higher than this pivot over here, we've negated multiple weeks of low yields, which has given Tesla the reason to run and why I think we got a massive oversold technical bounce. Now, Elon has expressed to us in live Twitter spaces that he is very skeptical about the stock performing in a high interest rate environment, and he knows that as long as the Fed is on a path of raising and tightening the economic policy, it is going to still undermine Tesla's price action just due to how basic economics work. This is what the Tesla CEO has said. So as much as I love Elon and Tesla and wholeheartedly believe in the company, we have to take what he says at face value. We have to overlay it with what we can see on the charts and what economic policy is telling us. And with the recent surge in Tesla, in interest rates, you could see softening in the Tesla price. Now, I'm not saying that we're going to see Tesla collapse back down. That's certainly not what I'm saying. But we could see some softening in the price. Maybe you get a consolidation period and then a push back up. But ultimately, this $96 level into key resistance as the yield market is surging should be a decent level of resistance for Tesla in the near term. What you would want to see is Tesla to consolidate sideways or slightly down, making more of a consolidation pattern, say down like this, and then eventually trying to break up. But if you start losing key pivots around this level over here, you are vulnerable, to basically falling lower to this gap fill and then trading down from there. So there's a lot of key areas that the market is trading into and trading at. But let's just be mindful that Elon has said his stock is very sensitive to the rising yield environment, which is why we saw this drastic sell-off. And with the 2-year yield and rates back on the rise, potentially we could see more weakness in Tesla moving forward. If Tesla got a significant pullback, there's certainly levels that we can day trade and swing trade long. So we'll just have to see what type of volatility we get moving into next week.